Hello everybody, welcome to the Fundamental Analysis webinar here with AvaTrade. My name is Troy, I'll be presenting. As always, keep in mind there's risk with each trade that you take, so you want to manage risk in a way that makes sense for you. There are different tools that we'll go over in that regard that make the risk management side of things quite a bit easier within our web trader and app. So as we go through some potential trade ideas, hopefully we'll be able to get through some of the risk management stuff as well as we simulate some trades. Also, keep in mind that what we go over is not meant to be financial advisement, but is coming from an educational perspective. Now, from our main website, if you do trade by mobile, you'll see there's links to the major app stores for our trading app, which has the same functionalities as our web trader. Both our app and the web trader allow you to trade on MT4 and MT5 accounts. We have trading tools such as signals, an advanced economic calendar, the market buzz, etc., that can assist with your technical analysis, your fundamental analysis, and other things as well. So feel free to browse our app if you haven't done so, as well as our web trader. Now, to get into the web trader, we log in from the upper right corner here and just enter your email address and password, and you'll be in the web trader platform. Now, fundamentally, there's a lot that happened yesterday coming into today, and that's still going on. So two main storylines would be the US had their rate cut decision yesterday, and the federal interest rate, rather than being cut by 0.25%, which is what many anticipated, some were predicting the 0.5% cut, but not as many as thought it would be 0.25% rate cut. Indeed, they did a 0.5% rate cut yesterday, which caught some by surprise. We saw quite a bit of volatility following that decision and during Jerome Powell's speech thereafter, outlining his rationale behind why doing a 0.5% rate cut rather than 0.25%. Some speculate that it's kind of a catch-up, that maybe they're a little late with starting the rate cuts, and so since they didn't already do maybe of 0.25% the last time, and they felt like the labor market, which was mentioned by Jerome Powell, the labor market has been quite weak of late, not as many jobs produced, unemployment rate ticked up, etc. That was kind of the justification for the 0.5% rather than 0.25%. And some worry that they waited too long and that there could be some negative ramifications of having waited till now and then doing the larger rate cut all at once rather than a more gradual progression. So we'll see. The initial reaction has been positive now with the equities, the stock market. Stocks have gone up. The major indices have gone up in response. So there was a bullish reaction. The US dollar weakened after initially jumping all around, like everything else jumped around as the decision came in. But the direction that we ended up with was US dollar weakening, equities rising, and gold in particular went up to all-time highs against a weakening US dollar. And it makes sense that the US dollar would weaken with a larger rate cut than expected, because the lower the interest rate, the less value that money has in general. So it's less expensive to get your hands on the US dollar if the interest rate is lower. So you can have more of them for cheaper, and that's the idea of lower interest rates kind of lowering the value of a currency. And so if the interest rates are lower, then people maybe sell the US dollar many times and buy stocks or buy into safe havens like gold if the fear of inflation comes back. And that's something to consider. You know, the reason the interest rates were raised up so much over the past year and a half plus in the US and other places was to bring down inflation, because inflation had become so rampant after all of the easy money that was handed out with stimulus to get through the global pandemic. And so interest rates were raised back up to try and bring down inflation that was brought on by a lot of easy money that was out there during and after the pandemic. So those high interest rates indeed have brought down inflation quite well in the US and other places, but in the US, not to the target yet. Inflation, the target is to get down below 2%, and they're not there yet. Okay, so there are fears now that to try and improve the labor market, the US has now lowered the interest rate by maybe a larger amount than expected by many to try and help the labor market. But now what's that going to do to inflation? Because lowering the interest rate, if that devalues the currency, could cause prices to go back up further again. And since the US has not gotten inflation down to the target yet, and now a larger rate decrease than expected just occurred, there are some fears out there. So I wouldn't be surprised in this bullish market for the equities, for the indices and stocks, to see some fear hit with maybe announcements today, announcements tomorrow that are on the economic calendar. If they come in showing maybe higher than expected inflation, that sort of information coming out could stoke that fear with this large rate cut having been done, and maybe create another sell-off like we saw not that long ago in the equities and the stocks. Okay, so it'll be interesting. I think it'll be a bumpy ride with a number of these instruments as economic data comes in. I think we could see big reactions now in both directions, really, depending on how the data comes in on the economic calendar. Okay. Now, the other big story has been developing over the past couple days, escalating, I should say, over the past couple days in the Middle East with some attacks through pagers and walkie-talkies. It really feels like James Bond type stuff going on there. And so between Israel and Lebanon now, the Hezbollah group in Lebanon, we have to keep our eyes on the headlines and see what's going on there, because that could create fear in the markets as well if there's a major escalation beyond what has already occurred. And so the general effect is to move into safe havens and get out of the equities, that sort of thing. If there's some sort of large war escalation, potentially that's something that could happen with the equities and safe haven assets. Okay, so we need to be aware of that fundamental news situation as well, which maybe has some likelihood of having some escalations. So if you weren't expecting a bumpy ride, you could get one with some of the trading. So it's important to take care of, in the fundamental news situation like is occurring, take care of the risk side of things, okay? And whether that's each trade, you're risking a certain percentage, 0.5%, 1%, 2%, whatever that is that you prefer with your risk management, I would say now as much as ever, it's important with the type of things that are going on that you watch the risk side with your trades. Okay. Now, we can go to the market buzz. That's under the discovery section, and take a look. There's some interesting news on some individual stocks. Maybe we can find some other instruments. Maybe we'll look at what's happening with gold in the news. You know, Apple's trending the most. Microsoft's up there, Tesla, NVIDIA, tech stocks, of course, right? They seem to have led the way up, and now there's fears that the tech stocks might lead the way down if the market does move into a fear type of sell-off. Okay, so if we look at Apple, it's trending the most, so we can take a peek. Indeed, it's predicted. The technicals show with the trend analysis that even after the rate decrease, this is interesting, right? Even after the rate decrease, that Apple maybe could drop over 8%. Okay, and if you want the technical trend on that, you can click on the trend analysis and get the technical setup They're showing you the support levels down around 207 or just above. That's the red lines here. As long as the price doesn't move above this blue level of resistance, as long as it doesn't break above the blue line, then if it's below the blue line, they're saying it's a sell signal until it would drop into this range down here where you see the red lines. Now, we'll see how the market opens. I see the futures are red. I mean green right now. So whether this will move into the red and drop, we'll see. This very well, Apple could open above the blue line, which then would trigger a buy signal. Okay, so we'll see how the market opens in the US. Apple's not moving yet, so we can't look at the live chart yet. But as of yesterday's close and the price, this is what the signal was expecting technically. If this opens above the blue line or moves above, and like I said, the futures are pretty far in the green on the US indices, then this might flip to a buy signal if it jumps above 230, 230.30 is the pivot line. So we'll keep an eye on that. But you can see the technical signal was to sell. And when we take a look at any recent news for Apple, the first story I see when we get past the social media is new iPhone 16 unveiled in Russia as retailers skirt Apple's export ban. An article about the iPhone 16's most well-kept secret in terms of the repairability. And a lot of articles here that you could find on Apple to see if there's something here that would convince you to go one way or the other with any potential move with Apple once the US market opens. And you can read the entire article if you wish and pull it up and see, well, what is this article telling me? So there's an export ban that's affecting how people are trying to access the iPhone 16. That doesn't sound real positive, an export ban. You could read, what are they talking about? How are they getting their hands on it, and why do they have to go through special means? This is something that could affect the price movements of Apple. Obviously, the iPhone is one of their biggest products that they sell. And I also saw an article, I'm trying to find it, not that long ago, that talked about the sales of the iPhone 16 maybe missing the expectations. Okay, so you could go through and look back in time to see if you can find articles that could help you decide. Here's the article I was referring to. This is just from 2 hours ago. iPhone launch faces challenges as demand slows and competition from Chinese firms intensifies. So less demand and more competition for Apple. So that plays also into the technical signal here that the price might fall over 8%. So this sounds like a negative fundamental news story for Apple as well. And so you could read that article and see from another source, why is there maybe less demand for the iPhone 16 than expected? And maybe they discuss the effect that could have on the stock price. So some interesting reads that you can find here that came out recently, paired with the technical trend, could convince you maybe in this case, maybe I want to short Apple stock. And maybe since the futures are green, you could get a nice high price to short Apple, if you felt like that made sense, okay? I'm just running through some ideas so that you can use multiple tools, the technical signals, trend analysis, along with fundamental news that came out recently to help you decide what way would I trade on this. And it's interesting that this is a negative signal still, even after the large rate cut yesterday in the US, which usually Wall Street likes the rate cuts. But maybe it's stoking some fear that this was what they're calling a catch-up move, trying to catch up because they feel like they fell behind with the labor market. So we'll see how the market opens for Apple, and that may clue you in as to whether you'd be interested in following this trend analysis and maybe some of those articles that look weak for Apple. Now, we can switch categories to cryptos, currencies, commodities, indices. If we jump to commodities, gold was a big mover, and it doesn't surprise me. It's the largest circle here. It's trending the most online. If we click on this, not sure we'll find a trend analysis. I believe there's a live signal, so if there's no trend analysis here, we'll look at the signal. You can start to read articles that might talk about what's happening with gold. Here's an article about the rate cut. How has it impacted stocks, gold prices, crude oil, and bonds? So that would be a very interesting read if you're interested in trading on stocks like we were just looking at, also gold, crude oil, and bonds. So you can go to that entire article and read, what does this source think about the effect that this rate cut will have on those instruments? And you could read the entire article and see if it clues you in as to something that maybe makes you think you can predict how gold might move in the coming days or weeks, etc. Okay, like I said, there's a lot of short-term volatility right now, but the fundamentals are there with large rate cuts that some will discuss as to what they think maybe in the bigger picture that will do with some of these instruments. And so with reading an article like that, here's another one. Gold hits new high after Federal Reserve rate cut by proactive investors. So another article you could read to see about why did gold hit a new high. And it's obvious to me, right? You cut interest rates more than expected, that weakens the currency. When you weaken currency, that increases fears of inflation. And at the same time, gold then becomes a safe haven against inflation, and the US dollar is weakening at the same time. And so gold being paired against the USD could rise maybe quite easily in that circumstance. So I could understand, and many's prediction would have been, if they cut the rate more than expected, gold could probably go up to a new all-time high. And that's exactly what it did. And so you can read these articles to understand about current, past, and future movements with gold, okay, with the current situation. And if there's not a trend analysis in that market buzz area, we could just go to the trade area and let's see if there's a live signal on gold for the short-term expectation. Okay, the technical signal is a buy signal, okay? And it actually already hit the take profit zone. All right, so here's the pivot line. As long as it's above there, they're saying buy. It already hit the take profit area here between these two green lines. That's the zone where they think there's resistance. You see the resistance here where it spiked and came back down. So they figured if it got near this line, it would pull back. And once it got near there, we see a pullback already. Okay, so this was a really accurate signal. It not only predicted the direction, it predicted the distance to where you might think about taking profit before it might pull back. And it got right into the middle of that zone, and here's the pullback. Okay, so on the signals, it'll warn you if it already hit a key level. Here it tells you that it did. It already reached the take profit zone in this case. All right, now the question is, do you think this could pull back? And this, and you can trust this resistance now to go in the opposite direction. My take on it is some of these big movements were a knee-jerk reaction to the larger than expected rate cut, but that some fear will come back in, which could re-strengthen maybe the US dollar against gold. Fears of recessionary numbers are still out there, of a poor labor market. Those fears are still out there in the US, and many are seeing this larger than expected rate cut as a sign of fear that they waited too long to start cutting rates. Okay, so could start to look for opportunistic spots, even to go the opposite direction of the signal, if indeed the signal already carried all the way out to where the take profit recommendation was. So this looks like something that maybe you put your your stop loss above the all-time high up here now, and it would have to hit a new all-time high to overdo the momentum that put it there in order to hit your stop loss. And maybe you catch a short term, if nothing else, could only be a short-term pullback, but maybe you catch a short-term pullback in the meantime towards the support level down here, which is the pivot line, 25.67. So maybe 25.68, 25.70, you look for this to pull back towards. Just an idea when the signal already carried out to the expected distance, okay? But we already understand why gold went up. Before we looked at it, I expected to see that it was probably a buy signal, and that maybe it already had reached the take profit zone, which it actually did, okay? And we could carry this out to a simulation. Well, what if I wanted to sell? Okay, we saw that the take profit zone was up near the all-time high. So if I now decided, okay, I want to short this, well, then what better spot to put my stop loss above the all-time high? So my stop loss would be somewhere up here, okay, 25.95 or even above 2600 if you want to be more patient with your stop loss. Depends what you're looking to do. Smaller risk would be just above the all-time high by a few dollars. You could get above a round number like 2600 if you wanted to be a little more patient with the stop loss. Now, the opposite could be true, that now that this pulled back a little, you think gold will keep climbing, okay? What caused gold to go up was the larger rate cut than expected. That still exists, and so maybe gold continues to climb. So in that case, you might wait for a further pullback to buy, or you could go with the current market price, okay? So it's a little tricky when you see the signal that already reached the take profit zone, because you kind of missed that initial surge, and now we've got a resistance level that we're close to, and it's hard sometimes to buy from right at the resistance level, okay? So, in this case, I think I would choose not to make a trade on this because it's not an opportunistic spot to buy from. And to sell right now, technically speaking, it's an opportunistic spot to sell from, but you're going against the fundamental news, which is gold rose as a safe haven with fears of war and fears of higher inflation coming back, which both of those fears are still there. So I kind of like the idea of maybe being patient to see if gold will pull back down further to a price I might like better to then buy from in the direction that the fundamental news kind of says this should go, which is up, okay? So sometimes you just have to pass on the entry point and be patient to see if you can get an entry point in the direction you prefer, okay? Not that a sell couldn't be successful with a short-term pullback, but I think the fundamentals are still telling gold to go up. We'll see what happens there, but you have a couple options to sell on the short-term pullback, or maybe to be patient and buy if you get a price you like to go in the direction that the fundamentals actually tell you should go, okay? And if there are any questions about anything that we're covering, please feel free to do so. If I was going to choose to buy here, maybe I like the amount of pullback that's occurred. This has become a little better in terms of entry point to go after a buy position. And maybe I think it will naturally try to go towards a round number like 2600. Okay, so if I'm going to do a market buy, and maybe I want my stop loss below this little support level here where it was resistance, and then this breakthrough candle broke above and respected the resistance at 25.81 and bounced up. So maybe I think this pullback will stop before it breaks below this little support level. So maybe I put my stop loss at 25.80. I put my take profit at 16 or 2600, being a nice round number up here above the all-time high. And now I can see the risk management. My potential loss is quite a bit less than my potential profit. I've got my stop loss below a spot that makes sense, below a support level. I'm trading in the direction of the fundamental news, which is a weakening USD with a larger rate cut than expected, and maybe a rush back into gold with fears of inflation to follow, potentially, with interest rates being cut larger than expected. And so if the fundamentals you feel are on your side to make the move, and now maybe you have a better entry point than you had a moment ago to go in the direction of the technical signal, which was a buy. I know it hit the take profit zone already, but maybe it pushes back up a second time. Sometimes you can still use a signal that hit the take profit, pulled back if you still believe in that direction, I guess is what I'm pointing out. We are getting that short-term pullback that I expected. Had you traded on the pullback, it looks like you'd be doing good. Again, you'd be trading against the fundamentals, but it would be more of a short-term move, I think, if you did that. A longer-term projection is that gold maybe tries to push back up towards the all-time high it just established not that long ago. And so what we then do is we adjust our trade size so that we're risking the amount that makes sense. The technicals are set up, so now you just need to start putting trade sizes that make sense for your risk tolerance. So I want to get down around 600 to be about 1% risk on my account. So I need to go a little smaller than one lot, 0.8. And again, you can do whatever amount of risk you want per trade. It doesn't have to be 1% like my example. So now I'm below 1% risk. Maybe I go just a little larger, and that gets me little larger trade and closer to 1% risk. Okay, so now I can go ahead and make a move in the direction of the fundamental news, which says that the US dollar maybe could be a bit bearish against commodities and stocks, etc., with a larger than expected rate cut having occurred. Okay, so that was an opportunistic pullback if you're looking to buy. And a nice short-term pullback if you already sold on it to try and catch that pullback, which I'm less inclined to do. I'd like to go in the direction of the fundamentals, which is what we just did with that simulated trade. And it's a low risk, larger potential profit type move. If there are any questions, please ask as we're going through these ideas and concepts. Part of what I wanted to show you there was the risk management capabilities of the order window as well, so that you're always aware of how much you're risking on any particular trade. Now, we could also look at the equities, look at maybe a major index, and I'm sticking with the US instruments right now because the big news was out of the US. We're getting to all-time high territories on some of these indices as well. So we see it pushing up. We can try and take a look. Let's see, was there a signal on this? US 500, the buy signal. It has not reached the take profit zone yet. Looks like another solid signal from Trading Central. Had you looked at this signal just a few hours ago, you'd be way up in profit had you made the move. And we're almost to the take profit zone here. So again, it's going to find some resistance in this area, potentially. Now, if we're at all-time highs, there really is no technical resistance. If we go to 1 week candles, let's say, and I pull this down, there's no resistance over here. Why? Because we're at an all-time high. There's no spot where it went to and pulled back in the past because we're at an all-time high. There's no history above where it's at, so no technical resistance. So the only thing that will slow this are people who decide they've reached enough to take profit. Okay, when they start to profit take, then this would pull back. But right now the fundamentals are on the side to go up. The technicals are on the side that it could keep going up for a while because there's no technical resistance. So this take profit zone was likely just based on a certain percent profit that the signal was trying to make. And so it's nearly there. It doesn't look like it's too late to trade on this signal, but certainly not as opportunistic as it might have been a few hours ago. or as it certainly was a few hours ago. But it's nice to see, again, an example of a successful signal that's in the direction of the fundamental news, okay? And that's when these signals are most powerful, is when the technicals line up with the fundamentals. And in the case of the gold signal, and now this one on the US 500, the technical trend was an uptrend. There wasn't resistance, so the signal came out to buy, and the fundamental news yesterday happened to align with equities being bullish, and there goes a perfect signal then. Had the fundamentals been the opposite yesterday, and they didn't cut the rates at all, and the US dollar strengthened, then this signal would have failed and dropped below the pivot, and it would have become a sell signal had it dropped below the pivot line. So you can understand the power of the fundamental news and what it can do if you put it in alignment with the signals to increase your success with following signals. Meaning, if the signal doesn't agree with the recent fundamental news, then maybe you sit that one out. Like I kind of sat out selling from the high point on gold as it was pulling back, because the fundamentals say, well, maybe it should push back up to the all-time high again, even though that was a buy signal, it wasn't a sell signal. But had it been a sell signal, I might have ignored it, because the fundamentals say the US dollar maybe should be weak still, allowing commodities to rise a little easier. So, but what we've seen here is complete agreement with the fundamentals, going with the signals and strengthening maybe your resolve to follow certain signals that are doing quite well. Okay. Any questions, comments on anything? I'll pause for a moment. Okay, and I think we could take a quick look at the economic calendar. Like I said, the biggest news was yesterday, and there's kind of an afterglow from that news still. I think there will be some eyes on today's numbers. Okay, let's go to today's date. There's a rate decision out of Great Britain. Okay, expected to stay the same, to hold it steady. Now the same thing could happen here, where maybe it comes in lower than expected. It's expected to stay the same. Maybe they lower it to 4.5 or 4.75. Okay, if that happened, you could see an effect like you just saw yesterday out of the US, only with the strength of the pound and commodities or currency pairings against the pound, or stocks in the UK Eurozone. Okay, so always interesting to see how these rate decisions will come in. If they come in as expected, there's usually less of a reaction. There might even be a pullback on the direction that things have moved, because a lot of times the pricing as the announcement comes out already moved to where they thought it should be if this comes in as expected. If it comes in not as expected, that's when you get maybe a further movement. But be interesting to watch that come in. I think if we look at the volatility movements in the past around this, first of all, usually the rate decisions come in as expected. Above forecast has not occurred in the past year. Coming in below forecast happened once, and in that case, the pound weakened. Makes sense, right? USD weakened yesterday when it came in lower than expected. If here, the one time it came in lower than expected, the pound weakened and went down against the USD by about 53 pips in the 4 hours that followed the event. If you haven't used this tool, you should start playing around with it, see the power of what this information can do for you. It's a very simple tool to use. You pick the currency pairing you want for the announcement. You pick the time that you want after the past announcements to analyze, and the way the announcement comes in, how did it move? So if it came in below forecast as expected, the pound weakened. Okay, you can confirm that in the past. So if today it comes in lower than expected, instead of 5%, 4.75, for example, there's precedent in the past to think Okay, over the 4 hours after that happened, the pound dropped 59 pips, a range movement anyways of 59 pips down. Okay, and in the first 5 minutes, it moved nearly that full amount. So now you know you better get your trade in quickly after seeing that. It doesn't take 5 minutes to get a trade in, but you know what kind of entry point you need to get. If by the time you're going to place your trade it already dropped 50 pips, 45 pips, then maybe you're not interested in placing the trade because you know in the past that's the distance it dropped in and then actually pulled back some as time passed. Okay, pulled back up to only 16 pips. So it's interesting to see with this announcement, the movement was quick and then pulled back over the next 4 hours. So if you missed the movement, it looks like trading in the opposite direction last time would have worked. After 5 minutes, it drops almost 50 pips. Now you buy, and over the next 4 hours, it moved back up another 30 or so pips back up. So the range movement was 53 pips, but it ended up only down 14 pips after 4 hours. So you can see with this rate decision, there are knee-jerk reactions and then pullbacks. And so you can analyze the data over different time frames and get a trading plan for how you would trade based on how the data came in the past and what the movements did. If it comes in matching the forecast, it's almost like anyone's guess. It went up half the time, it went down half the time. Okay? 57% of the time up, 43% down, equal distances, almost the same distance up and down. And so matching the forecast, it seems like you don't have a statistical advantage other than to know the type of distance it might move. You know, in the first 5 minutes, we've got 23, 24 pips movement. After 4 hours, if it matched the forecast, you've got 66 pip range movement. So when it matches the forecast, there's less of a movement in the first 5 minutes, and the larger movement is over the 4 hours. Whereas when it did not match the forecast, it came in below expectation, the larger movement was within that first 5 minutes, and then the pullback was over the last 4 hours after the announcement. So, and that makes sense. There's less excitement if it matches the forecast. So in the first 5 minutes, it barely moved. And it took longer time to move the full distance. Whereas if it comes in as an unexpected number, above or below, then there's a larger movement in that first 5 minutes and then a pullback. Okay, so you can have a plan for trading on either circumstance then based on the past data. If it matches forecast, I see which way it's starting to move in the first 5 minutes and maybe it could continue that way over the next 4 hours. If it doesn't match the expectation, if it comes in unexpected, whichever way it goes in that first 5 minutes, the history shows, well, then maybe it pulls back after that because there's such an overreaction to the unexpected number in those first minutes. Okay, so just a way that you can have a plan when the numbers come in to know how you prefer to trade, and it's not anyone else telling you to do it, it's how you interpret the data from the past announcements. Okay, we can refer to that as data-driven trading. Okay. All right, and we can look at a number of announcements. We've got jobless claims coming out of the US. There's been a big focus on that. Manufacturing data out of the US. I believe there will be large movements with these announcements today. Why? Because of that rate decision yesterday. Okay. Now there's a hyper focus on everything because, wow, they cut the rates larger than expected. We think inflation then could be more likely to come back again with that large of a rate cut. Or maybe you think you're looking to see what will this do to the job situation. Obviously, these jobless claims won't have anything to do with what happened yesterday because these numbers are from a prior time period. But all of a sudden, it magnifies the effect of what this means about the economy now as we look at jobless claims numbers and manufacturing data. Okay. Also, existing home sales, there's been a focus on that. If we want to see what's the effect of home sales in the past on movements of different currency pairings, what if the home sales come in above forecast? well, then that tends to move to strengthen the USD. Okay, that makes sense. Better than expected home sales, USD strengthens 60% of the time, drops more often than it goes up. If it comes in below forecast, goes up 71% of the time. Only once did it drop significantly. Everything else either kind of stayed flat or went up 71% of the time. Okay, so if you have a short stop loss, you'd have only taken one loss, one really small loss, and everything else would have profited. Okay, 71% of the time it ended up if the numbers came in below forecast. You see there's a trend here, because if it's above forecast, it's the opposite direction the majority of the time in the past. So housing data, you can see, affects the movements of USD pairings. And you can start to have a plan for each of these announcements based on how the numbers come in, which way would you trade. Okay, and there are announcements tomorrow as well we could look at. Now, there's, Alfred, you're asking about some instruments, silver, Australian Swiss franc. Since we looked at gold, I think silver might be moving similar to gold. So it's also somewhat of a safe haven metal. So let's look maybe at the other one, because we're running out of time. Australian dollar Swiss franc. It's an interesting pairing, and I'll tell you why I think that's an interesting pairing. You know, the Australian dollar is a big commodities affected currency, meaning Australia is a big exporter of commodities, iron ore, coal, etc. And so if Australia is exporting commodities, then when the economy is doing well, when stocks are going up, when there's economic optimism, then the Australian dollar tends to strengthen with anticipation of more exports. Okay, and the opposite with the yen or with the Swiss franc, which are safe haven currencies, they tend to weaken when there's optimism on the markets and when stocks are going up and fear is down. That's when the safe haven currencies tend to be more weak. So that's why I say this is an interesting pairing, Australian Swiss franc, also Australian JPY, because when one strengthens, the other tends to be weakening also. Okay, because one strengthens with economic optimism, the other weakens with it, and vice versa. So let's see what the signal is here. It doesn't surprise me, it's a buy. Okay, why would it be a buy signal? Because there's economic optimism now. Stocks are flying up to all-time highs, the major indices, I should say. And so that means the Australian would probably be bullish. And also, if there's economic optimism, that means a safe haven like the Swiss franc might be bearish or weak. So it's a strong horse against a weak horse type combination. That's why you get really good price action on Australian Swiss franc and Australian JPY much of the time, okay? Because they tend to seesaw each other up and down as they strengthen when the other weakens and vice versa. So there's an economic reason why that happens with the Australian, as I explained, with being an export nation of commodities. So we're looking then at expected rise on the Swiss franc. This is the live price where it says signal last. The pivot line is down here. It doesn't look like it's trying to drop below the pivot at all. And you've got a good distance to the take profit zone. So this looks like a signal that could be something you might be interested to buy on, because the fundamental news is on your side. Economic optimism, which you would think should strengthen the Australian and maybe weaken a safe haven currency like the Swiss franc. So technicals and fundamentals both look like this is a good move, and it's maybe an opportunistic entry point because it's not right up at the take profit zone yet, like the US 500 already was and gold already was. Okay. All right. Thank you. I think this is where we'll stop. We've been going about 45 minutes. I know I start to lose attention span when we go much past that. So thank you for the participation, the questions, the suggestions for the currency pairing here. It's a good one to maybe consider making a move on if you like the entry point and the fundamentals behind it. Thank you all for joining, and good luck with your trading the rest of the week. Bye for now.